Welcome to This Explainer. Look, if you're a focused learner trying to completely rethink how you approach the markets, you are absolutely in the right place. Today, we're going to strip away all the noise, leave behind those outdated techniques, and start looking at the market through the fascinating lens of real volume data. We're about to fundamentally change how you view support, resistance, and price action. But let's kick things off with a pretty hard truth, all right? Have you ever just been incredibly frustrated by getting trapped in false breakouts? Or maybe you've watched a textbook support line completely fail right after you entered a trade? Well, the reason this keeps happening is highly likely because you're making decisions based on fabricated data. You see, the traditional retail charts that most traders rely on, they're often just showing you an illusion, a totally fabricated price action without any of the real money actually backing it up. So here is exactly how we're going to fix that in today's masterclass. We'll start by exposing the real data secret. Then we'll decode some basic volume rules, unlock the incredible volume profile tool, and finally, give you the exact playbooks for trading breakouts at LVNs and reversals at HVNs. All right, part one, the real data secret. It is time to stop using fabricated charts. We have to completely leave these behind if we want to trade with any real precision. Okay. Consider the stark contrast between trading totally blind versus actually seeing exactly where the big money is parked. On one side, we have fabricated data from retail CFD providers, places like Awanda or TVC. The volume you see there, it's not real. It's heavily manipulated because there's absolutely no actual market depth attached to it. But on the flip side, we have the real deal. COMEX and CME Group futures data. When you type in GC for gold futures or SI for silver futures, you are looking at exactly where real, heavy institutional money is flowing. Now, before you start stressing out about expensive data subscriptions, don't. You really don't need to pay for premium live data right out of the gate. The free COMEX futures data, which comes with a slight 10-minute delay, is honestly absolutely perfect for your backtesting and for pulling your key daily levels. You just do your analysis on the real data, and then you go ahead and execute on your regular broker. Moving right along to part two, decoding basic volume rules. Let's talk about the price and volume relationship. Before we unleash our secret weapon, we've got to quickly relearn how price and volume actually interact. So, the most crucial point is right here on this cheat sheet. Seriously, you're going to want to remember this. If the price is moving up and volume is moving up right along with it, you've got a strong bullish trend. Simple, right? But watch out for the traps. If price is moving up, but volume is dropping off, you are walking straight into a trap. A reversal is incoming. Price action all by itself will lie to you, but volume tells the absolute truth. And to make this even easier to spot in real time, here is a really fantastic pro tip for you. Just slap a moving average, an MA line, directly onto your volume indicator. Make it a stark, thick, black line. What this does is instantly visually confirm when a specific volume bar spikes way above the average. It confirms the strength of a breakout or a reversal without you ever having to guess. Which brings us to part three, unlocking the volume profile. This is the secret weapon. It is time to finally replace those outdated, completely worn out traditional support and resistance lines. Let's quickly break down these four terms because they are without a doubt the foundation of your entirely new trading playbook. The volume profile itself shows you trading activity at specific price levels, not just across time. Within that profile, we have the POC, or point of control. This is usually a bright red line pointing out the exact single price with the highest volume. Then we have HVNs, high volume nodes, which are just chunky areas where a lot of heavy trading went down. And finally, LVNs, or low volume nodes. These are the thin areas where almost nobody wanted to trade. Now, what's super cool about this is that just by glancing at the overall visual shape of the profile, you get an immediate daily bias. If you see a P shape where the high volume bulges up at the top, that points to a bullish bias. Conversely, if it's a B shape with the bulge resting at the bottom, that gives you a bearish bias. It is a quick, incredibly powerful way to gauge the market's initial direction before you even draw a single trend line. So, getting this set up is actually incredibly straightforward. First things first, turn on the session breaks on your chart. Second, you are always going to use the previous day's data to find your levels for today. So for example, if you're trading on a Monday, you pull Friday's data. Make sense? Finally, just grab that fixed range volume profile tool and drag it all the way across that previous day's session from open to close, and just leave it strictly on the default settings. Okay, part 4, LVNs, trading the breakout. Think of these as fragile glass floors. This is the fun part. actually making money with this data by capitalizing on those low volume nodes. Listen, this right here is probably the single biggest mistake retail traders make. Low volume nodes are meant to be broken, not to take support. Traders see the price dropping toward an LVN and they immediately think, perfect, support. But guys, an LVN is literally an area of zero historical interest. It is not a concrete floor. It's a fragile glass floor. The market designed it to shatter. So here's your exact step-by-step LVN breakout playbook. First, you've got to pull those LVN levels forward on your chart. When the price finally reaches them, whatever you do, do not buy the dip. Just wait patiently. What you're looking for is a strong, decisive candle to close completely through that fragile LVN zone. Once you get that solid candle confirmation, boom, you enter the breakout trade and your target is simply the very next node on your chart. It's a clean, precise, momentum-driven play. Next up, Part 5. HVNs, trading the reversal. These are your thick concrete walls. Because what happens when we reach those areas where millions of dollars were actually transacted? That's where we trade the high volume nodes. Now, totally unlike those fragile LVNs we just talked about, high volume nodes and the point of control, these are thick, heavily reinforced concrete walls. These are massive liquidity pools. The market makers use these specific areas to trap amateur breakout traders. So when price violently pushes into an HVN, you should absolutely expect a liquidity sweep, a fake out specifically meant to wipe out everyone's stop losses. And this is where it all builds into a complete system, your HVN reversal playbook. When you see price approaching a massive HVN or the POC, you instantly assume it's a trap. Let the price push in and just wait for the rejection. Wait for that liquidity sweep to fail. Once it clearly rejects, you enter a reversal trade, fading the move. And your target? You just ride it all the way back down to the next fragile LVN. All right, almost done. Let's look at the execution rule to really tie all of this together. You've got the zones, you know the logic, and you have the playbooks. But before we wrap up, we absolutely need to establish the final unbreakable rule of this strategy. 5. That's it, 5 minutes. That is the absolute strict, totally non-negotiable time frame you have to use. You extract your daily bias from the larger profile, sure, but your chart, your volume analysis, and your actual entry confirmation candles, those must all be executed strictly on the 5-minute time frame. Do not even look at the 15-minute. Don't get all lost in the daily chart when you're trying to execute intraday. Keep it simple, stay focused, and be precise on the 5-minute. So I'm going to leave you with one big question to think about. How are you going to apply the volume profile in your very next trading session? Because it is time to ditch those fabricated charts today. Go pull up some real COMEX data, map out your high and low volume nodes, and just watch how the market truly respects the flow of real money. Thanks so much for tuning into this explainer, and I seriously challenge you to put this into practice before your next live trade.